Ladies and gentlemen, good day and welcome to the NMDC Limited conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit. Thank you, and over to you, sir.
Thanks, good afternoon, everyone. At the outset, engagement of NMDC.
I'm sorry to interrupt you, Mr. Dixit, so your voice is breaking up.
That's what I wanted to tell you, man. Your voice is breaking.
Is it better now?
Yes, sir.
Yeah,
please.
now it's audible.
Yeah. So, thanks, Seema. Good afternoon, everyone. At the outset, I would like to thank the management of NMDC for giving us an opportunity to host this call. From the management side, we have Mr. Amitabh Mukherjee, Chairman and Managing Director, Additional Charge, and Director Finance. We would start the call, the opening remarks from Mr. Mukherjee on the performance of the company and the outlook, post which we will open the forum for Q&A. Without much ado, I would hand over the call to Mr. Mukherjee. Over to you, sir.
Thank you very much, and my apologies for being delayed by a couple of minutes by some time. Q4 has been, as you know, you've seen the numbers have been extraordinary for us. It's almost the best Q4 ever, and both in terms of production and in terms of sales. The margins, we could hold the prices in Q4 despite a lot of headwinds in pricing. Naturally, because of the Q4 performance, our overall performance for the financial year has also improved, and with a net profit of 5,500, I think that's reasonably satisfactory. That, of course, we have been helped by two extraordinary items. One was the sale of NINL, where we made around 280 crores, and the interim relief given by the Supreme Court for around 950 crores. So these two did help, but going forward, we look to better these figures, both in terms of production. We see FY24 to be anywhere between 46 to 49.50 million tons of production and sales, and a net profit of more than 5,500 that we did this year. Of course, we will not touch the FY22 figures. That was all-time high. But given the volume guidance that we have taken for the current fiscal and the pricing outlook, which might be a little challenge in the first two quarters, but going forward in the third and fourth quarters, let us see how it pans out. But increased volume would actually sustain us through a greater bottom line than it is available. It was done this year. So we can now take the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take our first question from the line of Mr. Ashish Kejriwal from Nuvama Institutional Equities. Please go ahead, sir.
Yeah, hi. Good morning, everyone. Thanks for taking my question. Sir, three questions from my side. One is on steel plant. We have spent around 2,500 crore, and we have shown this as a non-current assets and receivable from NMDC steel plant. So, first question is why we have not given it to while at the time of the merger, not to steel plant, and if it is not happening, then when the plant gets sold, will we get back it that time only, or will it linger longer? And associated with that, when we are expecting this plant to be commissioned?
This plant will be commissioned in June end. That's for sure, because all the ancillary plants now have been commissioned, both the coke oven batteries, the sinter plant, the power blowing station, the oxygen plant. All of them have been commissioned and are already producing. We are already producing and selling coke. And blast furnace refurbishment is on. I think that we should be able to blow in around 15th of June. And we should be able to go process the hot metal into steel in the SMS and then roll it to get the hot rolled coils by end of June. So we have a clear visibility now, and we are confident that by end of June we'll be able to roll out the coils. So far as the capex is concerned, yes, as you know that since the plant has not been commissioned, even all the OPEX is being right now booked into the capital work in progress. And whatever coal we are buying, of course, is to run the coke oven plant is also being booked into capital work in progress, as the sale of coal is being credited to the capital work in progress. It is reducing the work in progress. It will get commissioned within the next 1 month, and the capex till date I think is around 22,935 crores, so approximately 23,000 crores as of date, which includes the amount of coke that we have bought, less the amount of coal that we have bought, and less the amount of coke that we have sold.
So my question was, first question was that when NMDC spent 2,500 crore on NMDC steel plant, and still it's showing under our books as non-current assets. So why we have not shifted it to?
It is showing as about 200 I think
2,500 crore, 2,540 crore.
That is intercorporate outstanding. That is intercorporate outstanding. Why? Because you see, from the appointed date is 1/4/21.
Yeah.
And the actual demerger took place on 13/10/2022. So in this intervening period, whatever I have spent for the steel plant, we are supposed to get back.
So
and that is why it is being shown as. No, this cannot. This is not a loan. This is an intercorporate outstanding. It is obviously non-interest bearing. Had it been a loan, of course, intercorporate loan is now guided by Section 196. That's a different ballgame altogether. But this represents all the amount that is due for the expenditure that we made in the intervening period of 1/4/21 to 13/10/22.
Okay. So, sir, are we still spending on this? And once the plant gets sold, will we get back the same time, or?
Yeah. Even if the plant doesn't get back sold, once it starts commissioning, once it gets commissioned and starts earning, this will be paid back to us. Even if it is not sold, even if it is sold later, of course, if it is sold, then I will be a creditor. I will sit as a creditor in their books. Okay. And even if it is not sold, and once the revenue starts coming in, we are a creditor in their books, and naturally, all this money will come back to us.
Sure, that's clear, sir. And sir, second question is on the capex. Now we are in the middle of doing some slurry pipeline and other production enhancing projects. So is it possible to update what could be the probable capex in FY24 and 25, and what are on those?
FY24 we should be doing around 2,000 crores at least on the ongoing projects, if not more. And we are in the process of getting a lot of capacity enhancement work sanctioned. Most of them are on drawing board now, but all these sanctions we plan to complete in the next 6 to 9 months. So once those sanctions are there, so in FY23, FY25 there will be the tendering, and going forward, I think we will utilize most of our cash balances for capacity enhancement projects that we have, and we intend to spend in the journey to about 100 million ton capacity of both production and dispatch. At least 3,000 crores a year going forward in the next few years.
3,000 crore per year?
Yeah.
Okay.
Because we already have the major projects. Some of the major projects are going on. So, the pellet plant is around 1,200 crores. The slurry pipeline laying itself is around 1100 crores. The beneficiation plant is around 900 crores. The SP3 or the screening plant 3 in Kirandul is around 3000 crores. The recently sanctioned work for increasing capacity of deposit 14 and deposit 11C in Kirandul is around 1100 crores. The SP2 at which is already sanctioned and most of the clearance has been received. Now it is at the tendering stage. At SP2 at Karnataka, it's around 1,000 crores. So we have a major projects have already been sanctioned. Some of them are in execution, some of them are in tendering stage, and some of them are at the approval stage.
Sure. Thank you and all the best, sir. I'll come back in the queue then.
Sure.
Thank you, sir. We take the next question from the line of Mr. Mohammed Farooq from Pearl Capital. Please go ahead, sir.
Hello, good afternoon.
Good afternoon.
Thank you for the opportunity. See, I have been following up on the monthly production figures of NMDC for the past 26 months. So I noticed that your production is directly related to your monthly sales. And 80% or more of your sales come from 4 clients. RINL, JSW has more than 50% share. And you mentioned in your last meeting that you're interested in export opportunities also. But your exports are zero. Even last year, when the iron ore price were above $180 for more than 3 months, you did not export. So can you please let us know whether NMDC is really interested in exports, or what if one of your major clients, for whatsoever reason, reduce buy from NMDC? What's your plan B? When
I think the export.
Yeah, tell me. One is about the export.
You see, exports, it depends whether it makes an economic case or not. As of now, even at $180, it did not make an economic case because our domestic realization would have been more than the net export realization, because you must realize that at around the export duty on iron ore is 30%. So if you work back and see at the ultimate after the logistic cost, accounting for the logistic cost, the export duties and other things, if it is more profitable for us to export, then we do export it. But the current prices, and even at 180, when the prices were 180, of course, our domestic prices were also higher. So we always keep a tab whether it is more profitable for us to export on a net realization basis at the mine head, or it is more profitable for us to sell at the domestic market. So as of now, the maths always works out in favor of the domestic market, because our net sales realization in the domestic market appear to be higher when we compare it to the. So that is why, unless there is a severe downturn of demand and we are compelled to export, which is a less profitable option for us, we would not export. But yes, as you said, plan B, the export is always the plan B, because if some of our major customers, for some reason, their offtake is severely curtailed, then of course, just to maintain the volumes, we'll have to export, even at a relative disadvantage of it is. But we don't see that happening in the near future. Most of our major customers have major expansion plans, and if you see the offtake of JSW, major plants like JSW and AMNX, that has increased in the last financial year as compared to the year prior to that.
Okay, sir. One more thing, sir. Now, last year, May was not that good because of the export ban and also weather conditions. So what about this year? Do you really see a good improvement over last year in the month of May?
In the month of May?
Yeah, for the current month. Production and sales.
The current month, yes. Of course, you see, March we did an historic figure of 5.5 million in 1 month, which has never happened in NMDC. April, we have continued the momentum. Our April was the biggest April ever. numbers have, of course, I cannot reveal the numbers because that has not been declared in the stock exchanges as well. But as of now, our progress in May has been much more satisfactory as compared to any of the previous Mays. So Q1 also we expect that we would end up with one of the highest Q1s in the history of NMDC.
Current Q1 will be the best one, sir. That's what you're expecting.
Looks as if the current April was definitely better. The momentum is continuing in May as well. And naturally, we are very optimistic about the Q1 scenario in terms of volume, not in terms of prices.
So one last question, sir. What about any new clients that you're adding? You know, we see only JSW, RINL, and ArcelorMittal, and one more is Kudremukh. These 4 clients, 90% if you take. Any major client that you're going to add in the current year or next year?
You see, because of logistics in India, you must understand that the iron ore market is geographically segregated. So, where your mines are, so Odisha obviously will cater to the plants that are easier to and cheaper to transport from there. Naturally, our clientele in terms of geographical base has been more or less stable because that is how the markets within the country is also geographically segregated. So unless these new plants come in the geographical areas that we serve, which is the East Coast and the Karnataka sector and the West Coast also where we serve, unless new plants and capacity expansions come in there. So naturally, thankfully, most of our main clients have major capacity expansion plans, and some of them have already executed a major part of their expansion plans. So accordingly, we are very optimistic about the offtake from our existing clients. Chhattisgarh is again another place where we have a very deep interest in. But the real game changer would be when we get this slurry pipeline to Vizag, and we are planning, at least on the drawing board, at the drawing board level, we are planning to take this slurry pipeline, another branch of it towards Raipur also. That these two would be a major game changer.
When that will happen, sir?
It will take another 3 years, 3 to 4
3
years.
Okay. So last, when is the new chairman taking over, sir?
I have no idea. This is beyond me.
Thank you. Thank you, sir. All the best.
The chairman is appointed by the ACC, so I have no idea of that.
Thank you, sir.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. If you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Mr. Satyadeep Jain from Ambit Capital. Please go ahead, sir.
Hi, thank you. A couple of questions. One on the all the expansion plans, obviously in Kirandul, in generally in Chhattisgarh. When we look at all these expansion plans, just want to get an update on the evacuation. Also, where are we on the completion of KK line? Are there certain patches which are still pending? And if there is any patch that is still pending, what is causing that delay? And when do you expect the entire KK line to be completed?
Yes, the KK line is a 131 kilometer line up to and being doubled up to Nagarnar. Major part of it out of 131 kilometers, about 150 kilometers, about 110 has already been done, and the rest are in progress. And the capacity of that line is supposed to increase from 28 million ton to around 40 million ton. And railways has also undertaken a lot of doubling themselves beyond Nagarnar up to Vizag. They are doing it in patches. But you must realize that in railways, obviously whatever is done and is commissioned doubling, the benefits of that keep on coming. So it is not like a steel plant where the last mile has to be completed for getting the benefit of the entire project. We are already reaping the benefits of the patch doubling about 110 kilometers that has been done. The rest of the 20-30 kilometers that is left over is basically left over in the last phase that is between that is near our mine head. Hopefully, what our interaction with railways is that by the end of 2024, the entire stretch would be completed, and the capacity of the line would be substantially increased. But the issue is not here line capacity, that has never been a constraint. The issue is rake availability. So last quarter, and especially in March, the railways were able to provide us with adequate number of rakes, and as a result, the dispatches and consequently the production could be maintained. So if the railways are able to provide us with adequate amount of rakes, the dispatches and production can be enhanced substantially. You know, we have very limited capacity of storage because we mine at the hilltop and we store at the valley, and there is always a very limited capacity of storage. So naturally, unless we are able to dispatch, it affects our production also. So, and that majorly is affected by the rake availability. And once the slurry pipeline comes in, then that will be a great game changer.
The slurry pipeline would connect to the steel plant also, I'm guessing. When would that be completed?
Yeah, as of now, the work is in progress. By I think 25 end, we should be able to commission the verification plant. The pipeline progress is already out of 131 kilometers. I think pipeline for 24 kilometers have already been laid. Another 24 kilometers they have been aligned for laying. Another 24 kilometers pipes have already arrived, which has not been aligned, and only 24 kilometers of pipes are due to arrive. So work is progressing, and there are certain challenges. Sometimes there are always site challenges in progress of work. The pellet plant is also being made. So I think the entire system will be ready for use by FY25.
Okay. The second question on the offtake by different consumers in different states. We're seeing a lot of iron ore blocks being auctioned in Gadchiroli, Maharashtra. There's a lot of interest there. Obviously, JSW is also once a mine there. Do you see some risk, especially if you look at western regions, the offtake from some of these western players particularly gets limited and you have to find other alternative buyers for that?
We are very keenly watching all our main customers. We always interact with them almost on a very, very regular basis, on a daily and weekly basis. We are aware of their expansion plans. We are aware how their expansion plans is going, and we are very hopeful that given the approach that they are having towards their capacity expansion, that our relationship with our main customers would always be deepened, and obviously we expect that it is more of a symbiotic relationship, that we'll be able to service our major clients even more, because we are also in the process of increasing our capacity substantially. So I think that would be a win-win situation for both our customers and us.
Thank you. So just if I can please one quick question on the 2,500 crore that is outstanding. Just a follow-up to Ashish's question. Just want to clarify that amount will come back to NMDC within FY24.
It should, of course. It should. Depending on how the plant is performing, so that's something that would be coming back, not in one shot, but on a regular basis, that will come back to us.
Thank you so much. Thank you.
Thank you, sir. A reminder to all the participants to limit your question to 2 per participant. We take the next question from the line of Mrs. Sumangal Nevatia from Kotak Securities. Please go ahead, sir.
Yeah, good afternoon, and thank you for this opportunity. I joined the call late, so please excuse if this is already discussed. First is I wanted to know, sir, what is our capex guidance? This year we have done somewhere around 1,400 odd crores. So for 24 and 25 annually, how much are we looking to spend?
Just as I mentioned, for 24, I think we should be able to do at least 2,000 crores. 25, of course, from 25 onwards, with the additional sanction of work, because we are now, once the steel plant is commissioned, our total focus will be towards capacity expansion programs, be it for capacity enhancement of the production side or the dispatch side, the dispatch infrastructure. So going forward, unless we do 3,000 crores, it will be difficult for us to reach the 100 million ton, and we are committed to the 100 million ton target. And accordingly, we are focusing on getting these projects that are being executed to be completed, and the projects that are already sanctioned to be tendered out and executed, and sanction of a lot of new projects towards the 100 million ton goal.
Got it. So this quarter we started recovering the receivable from monitoring committee. So if you could just highlight, I mean, what is the outstanding receivable as on date, and what is the timeline we're expecting the future recovery?
You see, we have been petitioning the Supreme Court for the last quite a few years, last 6-7 years, that 10% that the monitoring committee had earlier retained should be refunded to us. And the Supreme Court has been kind enough to grant us an interim relief that whatever 10% was recovered between 1/2019 and 31/3/2022 to be refunded to us. Accordingly, we got about 950 crores. We are now approaching the Supreme Court to refund the. We are also approaching the Supreme Court to refund the entire amount from 2012 onwards to 19, and that outstanding as of date is around 1,900 crores after realization of this 950 crores interim relief that we have got from the Supreme Court. After that, we have thereafter we have around 1,900 crores of outstanding to be recovered on the same account, and we hope that the Supreme Court would be kind enough to sort of entertain our petition, which has been there for long.
Okay, so 1,900 crores is which is outstanding, which is before this
2019.
Okay. And have we accrued anything after that? I mean, from 22, say in FY23?
There was some, because mid 2022, mid last year, what happened is that we have been, since the monitoring committee was disbanded, so thereafter we are into direct sales, and of course we are depositing 20% now. 10% was earlier, and 10% under protest, but now that deposit has also been stopped. We did it for a couple of months, but now that Supreme Court has given us the order that instead of 20%, only 10% is to be recovered from NMDC, as is being done for the other miners in Karnataka as well. So naturally, there is no current accrual to the old outstanding of 10.
Okay, and so this is a net amount?
Interrupt you, Mr. Sumangal. So
just a clarification.
Maybe please request you to join.
Net amount, yes, it is a net amount in the sense that
You've written off something, right?
No, we used to write off this entire 20% as per the Ind AS in our books as expected credit loss and SPV charges, right? Now, obviously, that is why when we get back this 950 crores, it was not taxed. It is not a taxable income because the entire previous years we have already recognized this as an expenditure, and accordingly the accounts were made. Of course, while at the tax when the tax assessments were made, these expenditures were disallowed and naturally added back while assessing the tax liability. And accordingly, now that we are getting the refund, this is completely tax without any taxes.
Got it. All right, sir. Thank you and all the best.
Thank you. A reminder to all the participants to limit your question to two per participant. We take the next question from the line of Mr. Kunal Kothari from Centrum Broking. Please go ahead, sir.
Thank you for the opportunity. So similar question on the monitoring committee expense. So as you mentioned that from May 2022, it has been dissolved, and from now on there will be no cost that will be booking in our accounting statements. So if I believe the yearly cost that we used to book is around 500 to 600 crores. So from next year onwards, like FY24, this cost will not be incurred. Is my reading right?
It will be incurred half, because you see 20% was being recovered by the monetary committee, 10% on account of SPV and 10% on account of RNR. Of this, 10% has been directed by the court that you should not recover, and whatever you have recovered from 1/1/19 should be refunded back to NMDC, which has not now already been done, right? What we are fighting is the case of this extra 10% between the inception that was around 2013 to now to 2019. In Karnataka, all the other mines were only getting only 10% was being deposited by them, and NMDC was doing 20%. So 10% will still continue to be paid to the state government towards RNR charges.
Okay.
Sorry, towards the SPV charges. So that pend. So if anywhere I had earlier booked around 500 crores, now it will be 250 crores. So but that will be partially offset by the additional 22.5% that we have to now pay on Kumaraswamy, because Kumaraswamy, if you remember, was recently renewed. So that has in October 22. So from October 22, there is an additional 22% of sales from Kumaraswamy. So to that extent, yes, they are different items, but if you see the overall impact, we'll have to. You can check that 10% of sales, and this is 20.5% of sales on 50% of the production. You know, it's a math that needs to be done overall. But these are unrelated items, I must say.
Okay, got it. So apart from the guidance you provided in FY24 volume guidance, what volume guidance that we can see in FY25 as well?
Once you see, we have broken the 40 million ton barrier. Last year we did more than 40 this year. Going forward in FY24, we expect to do anything between 46 to 50 million ton. Yes. Depending on 2 or 3 things. One is, of course, the enhanced efficiency that we have in all the projects now. That will account for some. You've seen March, you've seen April, and we are into a major efficiency upgrade. The second is, of course, Chhattisgarh monsoons. If it behaves normally, then of course we get a greater time for mining, and it really helps us. That actually affects, if the monsoons are affected, then the production to the extent of almost around 1.5 to 2 million ton is affected. But if the monsoons are normal, so that we can do. And the third thing we are depending very strongly on is the upgradation of the Kumaraswamy mine from 7 million ton to 10 million ton. So for that, the requisite regulatory authorities are being followed up, and we have done a lot of formalities in this regard, and hopefully somewhere around mid of this financial year we should be able to get that enhanced capacity put to use. So considering all these 3 factors, I think anything between 46 to 50 would be eminently doable.
Okay, sir. Thank you so much.
Thank you, sir. We take the next question from the line of Mr. Kirtan Mehta from BOB Capital Markets. Please go ahead, sir.
Thank you, sir, for giving this opportunity. Just to sort of understand we are targeting 6 to 10 million ton increase.
Targeting
6 to 10 million ton increase into the production next year, and you just mentioned that 1.5 million ton, assuming the half year operation for the Kumaraswamy can add. Which are the other mines where this additional production would come through?
You see, the journey from 60 to, current 40 to 67 or 70 is up to 100 in 2030 is basically divided into two parts. One is, of course, the generic increase on our existing mines, the capacity for which in a few mines like deposit 14 and deposit 11C, the projects have already been sanctioned. For the others, the projects are being sanctioned. But apart from that, we will need the operationalization of deposit 4, which is under NCL, that is NMDC CMDC, deposit 13, which is also under NMDC CMDC, and we have to sort of around source something from Odisha if possible. We are looking at various possibilities, and some of it will have to come from overseas also, because we have a subsidiary company in Australia, and that some amount of would be offshore also. So overall, I think it is possible to reach a figure of 100 million tons in let us say 6 to 7 years time. That's an immediately doable thing. In the immediate term, of course, we are looking at 46 to 50, and we have what we call is whatever call that is required, whether we should work 24/7, 365, and increasing the production capacity of our existing plant. For example, the Bacheli plant, we are screening plant, we are increasing our existing capacity by around 2.5 million ton. So all these, I think, will account for whatever we are aspiring for.
Right, sir. And corresponding to this production guidance of 46 to 50 million ton, what would be the sale guidance? Also, we have seen sort of the inventory built up of around 2.8 million ton in the second half of the last financial year. Would that be sort of also considered sort of getting released during the FY24?
No, you see, going forward, FY24, I think we should be doing 46 as I said, right? Hello?
Yeah. So you are.
Can you hear me?
Yeah, I can hear you. What you are saying is production guidance is between 46 to 50 million ton. I was asking what would be the corresponding sales guidance.
The guidance has to be in tandem with the production, because as you know that we produce in the hills and we have very limited stocking capacity, and which is almost now full. So unless we sell, we are not able to produce. So as I said earlier in the question, that in March we could do 5.5 million tons, simply because our dispatches were supported, very well supported by the railways. So unless we dispatch, so naturally availability of rakes, which is a challenge, we are working closely with the railways. We are building the slurry pipeline. So the dispatches capacity has to be created in tandem. And we have already created a mine at storage yard at Kumar Maranga, which is near Jagdalpur, which is about 100 kilometers from our mines. So we are looking at all options so that dispatch does not become a constraint towards our production. Because as of now, unless we are able to dispatch, we are not able to produce.
Right, understood. Just in terms of.
I'm sorry to interrupt, sir. May we request you to join the question queue, as we have several participants waiting for their turn.
Sure.
Thank you. We take the next question from the line of Mr. Pallav Agarwal from Antique Stock Broking Limited. Please go ahead, sir.
Yeah, good afternoon, sir. So I have a question on the coal blocks, Toki Sud and Rone coal blocks. So any status update on that, sir?
Yeah, Toki Sud, in fact, we have a meeting with the mines, the coal secretary tomorrow and day after. We are pursuing the case. There are issues regarding land acquisition there, and that now we have decided to go through the Coal Bearing Act of land acquisition. But since, as you know, these are not virgin blocks, these were deallocated and then reallocated with us. So there are some complications regarding land acquisition. Once that is solved, we should be able to do mining in a very quick time frame. Of course, Rohane is a little later. We should be able to start mining around 2025 because the approvals are under process. There are also some land acquisition issues are there, but those are being solved, and most of it is forest land. So we have to do some compensatory forestation. So a lot of the activities are being simultaneously pursued in Rohne also. But Rohne is a little later. It should come around 2025. And Tokisud, if you are able to get the necessary approvals in terms of EC and other things and the land acquisition, we should be good to go around next financial year.
Okay, sir.
Or even at the later part of this financial year.
Sure, sir. So also just on this, the exceptional income that, we booked this quarter. So this money has actually already been received, right? So it's reflecting in the cash balance.
Yeah, it has been received in April. Yeah. Yeah,
So
NIL was received long time back. It was, the monitoring committee money has been received in the month of April. It wasn't received in March. In March, I think the orders came in March. It came on February 22nd or 23rd of February, something like that. And the cash was received in the month of April.
Okay, so the March cash balance.
So it's all realized. It's all realized.
Yes, it
was all realized.
Right. So because now we almost have close to 7,000 crores of cash. So, and our last buyback was some time back. So, is there any plan to probably for a buyback at some stage?
Personally, I would like to invest all of this into capex. And because if we can double our capex, because if we are going towards that 100 billion target that we have, we need some massive capex to be done, because without that capex, it is not going to grow. So capex is right now our first priority for the enhancement of the.
Okay, sir. Thank you.
Thank you, sir. A reminder to all the participants to limit your question to 2 per participant. We take the next question from the line of Mr. Chirag Singhal from First Water Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. So my first question was on the exports. So the current international price is around $103. I wanted to know at what price it becomes viable for us to export.
There's no particular number to that. It also depends on at what point of time at that point of time, what is the domestic prices. You see how the economic case is made up. We take the international prices, then from that there is a 30% export duty, and then from that there is a logistics cost from here to the port, which is around $20 to Vizag. The port handling charges and other things itself become $4 to $5. So when you account for all of these, and the royalty and other things that and then you account and then see what is your net export realization if you are making an export. And generally the trend is that you see that the net realization from domestic sales actually become higher than the net realization from the export sales. So as an economic case, it is difficult. Even we have seen that at $200, our prices were around 6,000 then. So naturally, an economic case was not made out. Now there is the second case is whether it is there you have a problem regarding your dispatches. So if some of your major clients there is an offtake issue, then that has to act as a sort of a plan B, that you do it to maintain volumes even if the relative realization in export is a little lower than the domestic one. So we have not come to that stage as yet. But yes, you cannot rule out export. You'll have to create the infrastructure and keep the export potential ready, because as somebody pointed out, and very correctly so, that more than 70-80% of our sales are to a few select customers. And if something were to sort of be affected between this in one of the major customers, then of course just to maintain the volume, you will have to export, even if at a relatively slightly lower margin than the domestic. Yeah. But as of now, the domestic demand is adequate for us to dispatch whatever we produce whatever we are able to produce.
So if I look at the current domestic price, so our fines price that we have declared is close to 4,000 rupees. Would it be the right understanding that at the current domestic price, if the international prices are, let's say, around $120, it becomes viable for us to export, at the current domestic prices?
At the current domestic prices, I think it will be more than $130 would become viable.
130.
Because the 30% is export duty, about $20 is the logistic cost, post cost, and then there is a 15%, around 19.8% on royalty and other things that also go from our pocket in case of exports. Because that is an all-inclusive money I get. So when you work back, it doesn't make an economic case for itself. At the current thing, it could be even more than $130 at the current level of prices. I haven't done the math, but it can be done easily.
Got it. So my next question was on this.
Mr. Chirag. May we request you to return to the question queue, sir? We have several participants waiting for their turn.
Sure. Sure. Oh, thank you.
We take the next question from the line of Mr. Rahul Jain from Systematics. Please go ahead, sir.
Yeah, thanks for taking my question. So firstly on pricing, we've seen a good deceleration in Chinese price, but we haven't really had any meaningful cut. So are we seeing a situation that the demand supply dynamics in India have turned quite favorable for the miners, and hence the price correlation may not really hold like it has held in the past?
Beg your pardon, could you reframe your question, please?
Yeah, in a sense, we've seen a good price cut in China, almost like a $30 cut, whereas we've just seen a $100 rupee per ton, in fines that we have done. So over the last 3-4 years, we haven't.
I've been saying that we are facing headwinds in terms of pricing. Obviously, we've been able to hold on as of now. But there are several pricing pressures and several headwinds. There's no doubts about that. But even at $100 and at our current prices, we are at around at least 30% discounted in the East Coast. Of course, at the West Coast, the margins, the spread between domestic prices and the international prices on landed cost basis would be much lower. It should be around, at the current prices, around $10 only. 10% only, but in the East Coast, I think it is hovering in the range of 25 to 30%. So
on the NMDC,
the import duty is only 2.5%.
Right. So then on NMDC steel, where is the due diligence process, and also on whenever the deal concludes, you will have to purchase 10%. Will be at the price at which the purchase is done, or at any different price? How will that work out?
No, I don't understand about the due diligence process because we are not driving the process. Right. The disinvestment is being driven by the Government of India, by the DIPAM, the Department, by the Ministry of Finance. So we don't have exact visibility about the stage at which it has. So we are not in a position to either confirm or deny or enlighten you with the details of the process or the stage of the process. Now, regarding the 10%, of course, the government holds around 60% of the holding, and it has decided to sell around 50% to its strategic partner. Now, the rest 10%, whether it continues to hold in its own name or whether it transfers it to NMDC, we don't have a visibility on that because no formal decision has been communicated to us. And if the decision is taken that it is to be held, those Government of India shares are to be transferred to NMDC, at what prices can only be speculative because we have absolutely no visibility on either things as of now.
Okay, thank you.
Thank you, sir. A reminder to all the participants to limit your question to 2 per participant. The next question is from the line of Mr. Saket Kapoor from Kapoor & Company. Please go ahead, sir.
Yeah, namaskar, sir, and thank you for the opportunity. I put forward my questions. Firstly, for this slurry pipeline, sir, what is the total capex that has been envisaged? How much have we spent? In the current capital work in progress, sir, an amount of rupees 1991 is being reflected as on 31st March 2023. So how much is on account of the coal that lies because of the NMDC steel part? And thirdly, sir, about the three factors which you mentioned for our production rising from 40 to 49 million, I find that the two factors are not controllable by us. So how confident are you about, firstly, about this monsoon part playing up, standing our way? Then we are giving this guidance of from 46 to 49. The factors must have we must have the control over the factors. So these were my questions.
So I'll take the three questions separately. First is your question about slurry pipeline. You know, the sanction cost of the slurry pipeline is around 2,900 crores. It is going to go up to around 3,500 crores. We have spent till date 1,240 crores till date, right? And three major works are progressing and progressing reasonably well. One is pellet plant. It is being done by L&T. That's around 1,200 crores. The other is the laying of the slurry pipeline, which is again being done by L&T. It is around 1,200 crores. And the third is at the headway, we have a beneficiation plant of around 900 crores. So that is being done by KPTL. So all these major contracts are progressing. So we expect that this year there will be a substantial increase in the slurry pipeline expenditure. Apart from that, we are also at the drawing board stage of making two more slurry pipelines. One would be from one would be from Nagarnar towards Vizag, and we are also thinking about the economic feasibility of having another pipeline from Nagarnar towards Raipur, if that is possible. And there's a small pipeline joining, of course, Kirandul to Bacheli. So these are I think the phase 2, phase 3 should cost at least 7,000-8,000 crores each. Because this 131 kilometers is going to cost us about 3,400, 3,500 crores. So naturally, that being almost double the length, would be at least 7,000 to 8,000 crores at today's prices. That's number one. Number two, you asked about the steel plant, is it?
Yes, sir. About the capital work in progress amount of 2,000 crores.
Capital work in progress today is 22,935 crores. Of course, as you know that the batteries of coke oven have been commissioned. One battery was commissioned around 5-6 months back, and the other has been commissioned about 1.5 months back. So this coke oven of we have operationalized. We are buying coal from Australia and also selling coke here. So naturally, because this plant has not been commissioned as per the accounting standards, these are all booked as plus CWIP or minus CWIP. The sales are booked as minus CWIP, and the purchase of coal and other raw materials are booked as plus CWIP. Including all the cumulative expenditure up to May 23 is around 22,935 crores. That's around 23,000 crores, of which, if you see, the net coal impact is around about 1,000 crores, about more than 1,000 crores. That is what the coal we have bought minus the coke we have sent, because we have to keep around 1.5 lakh coke ready for our blast furnace to be blown in. And now that is almost ready, and now we will be blowing in the blast furnace around 15th of June, and doing the mill and the steel making shop by end of June. So there we have a clear visibility out there. The third portion of your guidance is, of course, you say some of our is uncontrollable factors like monsoon. That's completely beyond our control. But the approvals are partly under our control, and we are actually expediting that, following it up. Whatever compliances are required, for example, in Kumaraswamy, we are doing it in double the speed. And so it is partially under our control. And the visibility that looks from us today, that we should be able to get all the clearances by middle of this financial year, and accordingly we can. And naturally, that we are giving a band of taking the optimistic and the negative and the pessimistic scenario, that around 46 to 50 would be the guidance. There is a spread there because we really don't know exactly when the approvals will come. But we are following it up, and we are fairly optimistic that they should come in the middle of the year, and we should be able to take a substantial advantage of that enhanced 3 million capacity at Kumaraswamy. And monsoon, of course, as you know, it's not in your hand, but we have had 2 major monsoons. So let us hope that this year the monsoons will not be. We don't mind an intense monsoon, but we mind an extended monsoon. Intense whether it rains 30 millimeter a day or 50 millimeter a day, it doesn't make a difference because it's the extended period that really costs us.
Sir, our losses in the pellet, other minerals and services sector are still continuing, sir. We lost around 154 crores for FY23. So what steps are we taking, I think, to mitigate the same? It means the diamond mines ka bhi losses hai.
You see, the pellet plant otherwise is structurally okay and things are okay, but you must realize that the pellet plant was designed for processing 85% slimes. And now, because of regulatory issues, we are not being able to use our own slimes, which is lying at, let us say, 300 meters away from the pellet plant. It's not even 300 meters. I think it is around 100 meters from the pellet plant. It is on the edge of the pellet plant. But because of the regulatory issues, first the renewal of the Donimalai mine itself was delayed. Then when it was delayed, then there is a dispute regarding the tailing pond itself. Now we are obviously pursuing with both the Ministry of Forest and the Government of Karnataka to give us permission to use our own tailings. So hopefully that should take another 4 to 6 months, and once we get those tailings, we can run the pellet plant. The other major loss-making unit was obviously Panna, which is the diamond mine. The good news is that Supreme Court has allowed us that we should be doing the mining, has allowed us to do the mining, and necessary approvals are being processed. The internal timelines, and we are pretty confident that we should be able to do it. We should be able to start mining on 1st of October. Or 1st of October, we should be able to start Panna mining. But the good thing about Panna mining is that we have now an additional source of income there. Whatever the black tuff was there, which was lying as waste, around 5 to 7 million tons are there. Now, finally, the forest authorities and the environment authorities have allowed us to sell it in a limited way. But that would also contribute to the overall, and we expect Panna to break even, more than break even, and turn in profits after a long time by next year. Because it will be October, so maybe this year it will be just the losses will be minimized, or maybe we'll just about reach a break even. But going forward with the mining of diamonds in Panna, and also the sale of black tuff, which was otherwise a waste material, we should be able to change the color of the profit and loss from red to black.
Thank you for the reply, sir. And if you could give the breakup also.
I'm sorry to interrupt you, sir.
Yeah,
Mr.
I'll join the queue. Yeah.
Thank you. We take the next question from the line of Mr. Nilesh Doshi from Prospero Finvest Limited. Please go ahead, sir.
Thanks for the opportunity, sir. Sir, do we have any agreement with the NMDC steel plant to supply the iron ore? And if there is any agreement, then how much the sales volume can be increased?
Yes, we have a long-term agreement with the NMDC Steel Limited. And naturally, NMDC, it will be viable for NMDC Steel Limited to buy from us only because of logistic costs and because of the geographical location of it. And a 3 million ton plant at 1.8 tons of iron ore per ton of steel, we should be selling around 5 million tons of, around 4.5 to 5 million tons of iron ore per annum when the plant is running in full capacity. Because
this will be the additional to our earlier sales, because the plant has not yet come.
These are how we are looking at the 100 million ton roadmap, because it's not only a question of production, it's a question of sale also. And NMDC Steel Limited is going to be one of our permanent and major customers going forward.
Okay. Sir, you have mentioned the export duty of 30%, but is there any import duty? And if there is an import duty, what is the rate of import duty?
It is only 2.5%. It is only 2.5% the import duty, and that is why the Indian miners like us, do we face the brunt of lower international prices? Because then the steel makers have the option of buying from India or from or their imported iron ore. But we are unable to take the advantage of high international prices, because when you discount it by 30% and then discount it by further 20% for royalty, etc., and then discount it by another $20 for $25 for the logistic cost. So we are unable to take the advantage of high prices in the international market. But the disadvantages of lower prices in the international market affect us directly, because the import duties is only 2.5%.
But so there is any import quota? It is free.
It's a free import.
It's a free import. Sir, every month we announce the price of the fines and iron ore. So that price and the taxes, the composition of the ultimate price is the 50-50, because we announce the price without the royalty and other duty, so additional royalty. So what is the ultimate price to the buyer?
It is around 20% is around taxes and duties. 15% is, of course, what you call 15% is royalty. 30% on royalty is your DMF, and 2% on royalty is your NMDC. So all this add up to 19.8% of our declared prices. And on a landed cost basis, then you'll have to factor in where your customer is, because the logistic cost is also very substantial. From here to Vizag itself, it's around $20. So, and then if you are taking it to the west coast, then there is port handling charges, and then there is sea freight, etc. It depends on where you are.
Okay, sir. If you permit, I ask the only last question. That you said that you believe in the massive capex to improve our profitability in the future. But already we have 7,000 crore rupees on the balance sheet, and we are generating enough cash from our current operation. Is it not wise to distribute that amount to the shareholder in the form of either a dividend or buyback?
This year we have already, you see, if you see the history of NMDC, we have been distributing in either form around 45% of our net profits every year.
Yeah.
Every year. This year we have distributed a little less because our profits were a little less, and we have some capex plans as well. So we have distributed overall 6.6 rupees per share, which translates into approximately 35-36% of our net profit. So we have been very generous in terms of payouts to the shareholders, and as you know that our dividend yield is also one of the highest in the country, which most of the public sectors are there. So,
because I'm asking, because even opening remark you said. Sorry, madam. Okay, I remain in the queue. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for the day. I would now like to hand the conference over to Mr. Amit Dixit for closing comments. Thank you, and over to you.
Yeah. Hi. Thanks everyone for joining the call and participating in the discussion this afternoon. I would sincerely thank Mr. Mukherjee for very patiently answering all the questions. I would now like to hand the call over to you, sir, for any closing comment.
Well, I wish to thank all the participants for taking the time out, and we'll be more happy. We'll be very happy to have more questions offline. And if you have any queries, do please contact my office, and we'll be happy to obviously give you all of the clarifications. I believe that going forward, NMDC has a bright future, is essentially because now that the steel plant has been demerged and it will be commissioned, I think the focus now will be completely on enhancement of the mining business, which because of the steel plant was both in terms of human resources and in terms of financial resources, it was that was a very resource consuming effort that we had. But now that it is getting, not only it has demerged and formed into a new company, and we are going to commission it. Now the focus would of course be on the mining business and the projects related to mining business. And we, going forward, I think the growth trajectory of NMDC will completely change. From I think the growth graph would be much more steeper and much more sharp than it has ever been in the past 8 to 10 years. So I think NMDC is a story to stay invested in. Thank you so much.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your